Hello, everyone, and good morning, and welcome to the U.S. Senate. Very excited for our first event of the day, Catalyzing Investment Through Blended Finance for Energy Transition. And without further ado, I'd like to welcome to the stage U.S. Special Presidential Envoy for Climate, John Kerry.
Thank you very much. Good morning, everybody. Welcome to the U.S. Center and to what I think is an important part of the mosaic of how we are actually going to accelerate the deployment of capital and begin to be able to really put ourselves in a position to win the bigger battle, which is the battle of the climate crisis. As we all know, we know what's happening. We know about the floods and the fires and the droughts, the heating, the melting, you name it. But lamenting that on a daily basis without also taking time to really put together the solutions will not get us where we need to be. What we need to do is be able to deploy trillions of dollars of capital. According to the UN finance report, we need about $2.5 trillion to $4.5 trillion a year for the next 30 years. And it's only by pulling private capital to this task that we're going to win the battle. No government has enough money to be able to make this happen by itself. It's just not going to happen. So we have to take matters into our own hands. And that means mobilizing private capital to the greatest degree we can, and we need to make this transition to clean energy happen a hell of a lot faster than it is. So how do we do that? We've got to finance the transition. And that's exactly what the blended finance for the energy transition is all about. The IEA tells us that, well, not just the IEA, the IPCC, equally importantly in 2018, told us that back then we had 12 years. Now we have about 6 years because we're almost halfway past the time. And the clock is really ticking fast. Now, blended finance, to some degree, I've gotten a little tired of the term because I don't see a lot of it. And we've been talking about it for a number of years now. It's not complicated, folks. It's basically a way of crowding in, as people like to say, attracting is a simpler word, money that feels safe enough to invest because it gets a return on investment. And those deals don't happen automatically nowadays because there's a lot of risk out there. And people look at this, depending on where it is, what the government is they're dealing with, what the ground rules are, what's happening in the region, what's happening globally. I mean, it's just a whole lot of input that goes into this. And we have to try to condition that input, which is exactly what we are trying to do here. It's too often a buzzword and not often enough a practical enterprise. What we did with the Jet P in Indonesia, what we did with the Jet P in Vietnam is basically a blended finance structure. So what we're talking about here are sort of bespoke deals, fundamentally. But we don't have time to run around the world and find the players and put it together and come out a year and a half later with a Jet P for Indonesia. We got to get the capital moving because the capital is racing to the table because it thinks it's got a winner or it can create something that will, in fact, provide that return on investment. So as a result of our impatience, really, and the creativity of Julia Christensen and others, and it's only happenstance that her last name is Christensen and she's here with our friends from Denmark, her long-lost cousins. But the reason that our office decided, and Julia particularly sort of picked up the ball on this, was to create a competitive process to award grant funding, which will attract money, to private sector-led investment funds. And we partnered with USAID to run the process and benefited from the DFC's, the Development Finance Corporation, Jake Levine's here. We wanted to demonstrate how blended finance can be scaled effectively. So we knew we couldn't do it alone. We needed other players, and we're very grateful to Denmark for stepping up. They matched our award contribution dollar for dollar. and this wouldn't be happening without them. So we're very grateful to Denmark for stepping up. And from the outset, we sought private sector-led investment funds focused on the just energy transition in emerging markets. And there are specialized folks who are sort of really looking at that sector. So importantly, we're also looking for innovative structures that could deliver more private sector dollars for every public grant dollar that we typically see in blended finance. And to get that kind of leverage, to make that happen, finance, public finance has to buffer the risks or boost the returns ultimately. And that will happen not just through grant finance from donors, but with risk-taking capital that comes from finance institutions and MDBs. So we were genuinely impressed by the strength of a wide range of proposals. I want to thank each and every one of the investment managers that saw fit to compete and to come to the table and who submitted a proposal. And I know from my folks that it was a tough decision to decide who the awardees are. But let me just announce those now. The two winners of the award process. Number one, India-based Eversource Capital and its equity fund, Eversource Capital Investment Partners 2, and Switzerland-based Responsibility Investments AG and its debt fund, Asia Climate Fund. Very delighted that Satish Mandana is here and Rupali Gupta are both here from Eversource. And I also want to highlight Germany and the Netherlands' commitment to the Responsibilities Asia Climate Fund, which anchored the fund's first close that was announced last week. So, my friends, your support is a testament to how blended finance can work and how we can raise more money than any government's going to put on the table. And I thank Dirk from BMZ and Carrie from FMO for joining us today. I hope we can collaborate on at earlier stages, actually, in the future. And it'd be good to do that. So finally, the BFET is it's a model. It's a template. And clearly subject to the possibility of tweaking or of improvement, but we got to excite this capital, folks. That's what we did yesterday with the ETA, announcing a sort of credit. But there are any number of possibilities here. Mark Carney's working on some things. Other folks are working on them. We really need to support blended finance approaches. And this is a real-world example of exactly how that can work. So I hope that this is going to help prove that the many risks that keep investors at bay will realize there are attractive ways to make that capital deployment safer than it is perceived to be, and get rid of the barriers of resistance that are existing for any number of barrier reasons. So I am absolutely convinced this is the most significant economic opportunity facing, presented to the world in all of human history. What happened with the Industrial Revolution happened in a certain part of the world, and it happened because clearly there were new inventions that were going to streamline production and make available, the age of robber barons and so forth, and it had an enormous impact on the growth of Europe and the growth of the United States, other parts of the world. But now, every country in the world is impacted. The entire planet needs to reconfigure the way that we are creating energy and sharing energy and dealing with energy and selling energy. And that is going to happen between fusion and hydrogen and batteries and all the other things that we're engaged in. It's going to happen because it is imperative that we get to a low income, to a low carbon, no carbon economy. And we're going to get there. That's clear to me with what's happening with electric vehicles and the different and the increasing amount of venture capital that's moving and the demand signals that are going out now with respect to supply of fuel versus the consumer demand for electric vehicles and other things. It's going to happen. The only question is, are we human beings who've been given the gift of being rational and being able to think about things actually going to make the decisions and implement them so that we can move fast enough to get this done, so we adhere to what the scientists have said, which is the only way you keep the worst consequences of the crisis from devouring communities around this planet is by living by the North Star of keeping the Earth's temperature increased to 1.5 degrees. We are perilously close to losing that opportunity. That's why this meeting here actually has real importance, and your efforts are significant. So I thank you for that, and I want to welcome my friend, the ambassador, former ambassador to the United States in Washington, Ambassador Thomas Christians. Thank you.
Thank you very much, Secretary Kerry, and thank you for having Denmark partner with you on the Blended Finance for Energy Transition Awards. Just one additional comment to your introductory remarks. The big item of discussion at this COP is obviously how we deal with the transition away from fossil fuels, and I think this kind of award is part of creating the excitement about the opportunity, why we need to do the transition, that it is not a punishment. We're not trying to roll mankind back into the cave. We're actually trying to take a step into a future and describe what that future looks like and could look like, create a new vision of excitement. And that's why it's my pleasure to represent Denmark today at this event. We know that at COP28 you're not allowed on stage unless you bring in an abbreviation, and I think we have that one with the BFET. This COP28 comes at a vital point in time. You mentioned that we are...
I purposely did not mention the acronym.
You reminded us of the climate change that's already happening, and we often talk about that as something that's happening in developing countries, in vulnerable countries, but actually even in Denmark we've this year seen a number of records of weather events, high temperatures, heavy rainfalls, floodings, and I think that also helps inspire us to do even more. And we're of course not close to experiencing what developing countries are facing right now, but still we do feel the impact as well. And thus we know that developing countries are more exposed to the impact of climate change, and we need to deliver a lot of climate finance fast, at scale and speed. More than half of what we need in terms of financing, the $2.2 trillion per year, needs to go into green investments. The total bill is north of $4 trillion for achieving the SDGs. And to bring matters to a head, half of the most challenges for developing countries is that absence of green investments into green, clean technologies. And it is therefore clear that we need to step up our financial creativity to combat climate change and get these investments rolling. And that's where the Blended Finance for Energy Transition program comes in. It's a creative way of maximizing climate finance. We are using public funding to de-risk private investments, and it's actually amazing what a small portion of public capital can do in terms of leveraging the private sector. In numbers, this blended finance vehicle aims to secure a total of around $1.4 billion in green investments, with more than half of that coming from private capital. And for a start, the investments will focus on the green transition in India, Vietnam, and Indonesia, the JETP countries, where Denmark, by the way, is happy to be. I think we're the only non-G7 country that is part of the JETPs in both Indonesia, Vietnam, and South Africa. And we're very proud to be there, including with our energy transition experts. The process of setting up this blended finance vehicle has been incredibly fast. We only started working on it between the U.S. Department of State and Denmark in January this year, and we really want to thank the American colleagues for bringing us in and allowing us to be part of this collaboration with your office, Secretary. And in April this year, USAID announced the tendering, and today here we are. So that shows that when we put our shoulder to the wheel, we can actually move fast. The two winners, Responsibility and Eversource, have just been announced, and the contracts will be completed very soon, and thus the whole process of raising blended finance will be completed in less than a year from the cut of the first sod. So this is a testimony to the fact that it is possible to combine both scale and speed. The money will be invested in solar energy, wind energy, green grid connections, waste management, and much more. So finally, just an invitation to another event that we will host a little later today at 11, another blended finance launch and a new collaboration that the US and the Nordic countries is engaging on, also to work on blended finance and combining public and private funding. It's called the Investment Mobilization Collaboration Arrangement, IMCA, another one, and we're launching that at 11 a.m. At thematic stage 4 here in the Blue Zone. So it goes to show that today we are really moving on financing, on blended capital, and hopefully, and just to end there, those of you who are listening into the negotiations and the global stocktake is the main decision we need to take, and Denmark is facilitating that conversation at the political level with South Africa. The means of implementation, the question of finance, is the most divisive and difficult one. But I think by showing in practical terms with examples like this one how we can actually move finance, we're also showing and hopefully paving the way for a good outcome of the global stocktake, including the financing part. So thank you very much for your attention.
We now invite everyone to turn their attention to the screen for virtual remarks from Jochen Flasbarth, the State Secretary in the German Federal Ministry for Economic Cooperation and Development.
Climate change is serious, and so is the need for climate financing. We need climate financing from all possible sources to keep the 1.5-degree goal within reach and to triple the installed renewable energy capacity by 2030. As one instrument, Germany has designed the Asia Climate Fund. Its goal is to provide capital to companies in various emerging economies in Asia for investments much needed in a global energy transition towards sustainable, modern and green forms of energy. This will spread green technologies across the region and support the green transformation of domestic industries. Investments from the ACF will serve as a good example and promote viable business cases for adopting clean technologies around Asia. Small and medium enterprises are important agents of change, with splendid transformative ideas but often limited access to finance. The ACF will contribute to close this gap. Germany has committed a total of 58 million euros to the necessary risk capital of the ACF in 2022 and 2023 and equipped the fund with additional means for a technical assistance facility. To achieve maximum impact, the fund needs scaling up. Therefore, I'm delighted about the investments announced today by the US and Denmark to the fund's first loss tranche, and I hope others will follow their example. However, public capital alone won't be sufficient. Without mobilizing private capital, ambitious climate goals are not reachable. Hence, I welcome the substantial funding by our Dutch friends from FMO, as well as the first closing with private investors. This resonates extremely well with our own priorities, the mobilization of private capital for the achievement of the SDGs and the Paris Agreement. Only if we join hands and manage to redirect all capital from fossil fuel to renewable energies, we can make the necessary transition as just, smooth and sustainable as possible. Thank you very much for your attention.
We now invite our panelists onto the stage, and to moderate the upcoming discussion, I'd love to introduce Julia Christensen, the Senior Advisor for Climate Finance in the Office of the U.S. Special Presidential Envoy for Climate.
Is this on? Okay. Good morning, everyone. I'm Julia Christensen in the Office of the Special Presidential Envoy for Climate. I'd like to thank you all for coming and also thank our panelists for joining us on stage today. Really excited about the discussion that we're going to have. We have a slight change in plans. We've invited our colleague Jake Levine from DFC to speak with us today. We're going to let him essentially cut in line because he has to run off to another important finance event from here. So I'm going to pause. I'll give a little bit more context in a second, but I just want to make sure that Jake can say a few words, and then he'll have to dash, and then we'll come back to the panel discussion. So thanks for your understanding. Jake, over to you.
Thank you, Julia, and apologies to my co-panelists, although I think maybe all of us have been in some similar situation this week or will be, because if you're not leaving something early and getting to something late, then like, what are you doing at COP? But I really wanted and have been very excited to be here because DFC has been really focused on what it could do to provide whatever spark to this effort we could. I feel grateful for the opportunity to be here, to you, Julia, to you, Jacqueline, to Rupali, to the whole team, who have really been leading this effort and creating and enabling the entire thing through your ambition and your partnership and your hard work. So thank you. I want to just briefly mention what the significance of DFC is to this conversation and pick up on some of what Secretary Kerry started out by saying at the very top of his remarks, which was that what we're really talking about is accelerating the deployment of capital into this space. And that is exactly what DFC has been doing under this administration. Over the last few years, we have gone from an agency deploying somewhere around $450, $500 million a year into climate finance to this year's $3.7 billion across 56 individual transactions in more than 25 different countries. Last year, we were at about $2 billion. We were proud to have our second multi-billion-dollar year in a row. What are some of these transactions like? We're talking about close to $1 billion over the last 18 months in solar panel manufacturing in India, more than $2 billion of commitments in our political risk insurance on debt for nature restructuring, close to $300 million in critical minerals processing, exploration, production, more than $70 million in electric mobility. You can see this is an economy-wide effort that is scaling and accelerating. But the truth is that in order to really scale, I think there is now a broad recognition and a broad consensus that it cannot be done in this space and in emerging markets without blended finance. And what in some ways that's really about is the value of early partnership and risk-taking. So, I think about this effort. It's a whole-of-government effort. Grant capital, technical assistance from USAID, expertise, convening, ambition, cajoling, even from SPEC. From DFC, the expertise of our funds team, who is familiar with the markets, with the GPs, with the different players and stakeholders, coming together to work through a process to identify the best use of this risk capital. So it's whole of government, it's expertise in local managers, and it's shared risk. Now, we know responsibility and Eversource very well. DFC last year committed $19 million of a credit guarantee to Responsibility in its Climate Smart Food Security Fund, which is operating in Southeast Asia, Africa, Latin America. Responsibility is among one of the most innovative managers out there. We've been proud to also participate in their gender equity and financial inclusion funds, and we're looking forward to doing more. And I'm particularly proud today, Satish and Rupali, thank you for the opportunity, to be able to share that in 2 days, we will be taking a $50 million investment to our board into Eversource's new fund, which is raising $900 million to deploy across India and Southeast Asia in clean energy, e-mobility, circular economy, the whole gamut of what Secretary Kerry was talking about. But one of the things that distinguished DFC's partnership with Eversource was that we were there early. And that was in the spirit of this whole BFET collaboration. How to come early to these partnerships, to lean in, to take the leap of faith, to say, this is going to be successful. It's going to be successful because we're going to put our sweat equity in, but we're also going to put our equity in, and to work and help funds raise. Now, I just want to say and I'll close with this. The part that to me leaves me most hopeful about this whole effort is that with all the investment and all the capital that is moving into this space, that the work that BFET was able to do here and the work that DFC has been able to do with Responsibility and with Eversource not only is supporting these sectors and these markets, but is working with managers who are from these markets, who know the markets, who have expertise, who have relationships, and can drive change from the ground up. That's what we are fundamentally about. DFC's dual mandate of advancing economic development as well as advancing the strategic interests of the United States in partnership with its partners in key markets around the world. And I cannot imagine a better circumstance to be implementing and articulating that dual mandate. And I really appreciate the chance to be here. And thank you, and apologies again for cutting in line, but really grateful.
No, thank you. Thanks so much, Jake. Glad that you could share that perspective. Good luck on the rest of your day. So what I didn't mention before is we're not going to be doing formal introductions. As you can see, we do have the panelists' information behind me on the slide. I hope you can read them, but I also encourage each of you to also introduce yourself as we go along. So before we dive into the discussion, I thought I would give a little bit more background on BFET, or as Secretary Kerry likes to say, the full acronym, Blended Finance for the Energy Transition. We essentially set out to award funding to one or two private sector-led investment funds, specifically we had an aim to mobilize over $1 billion. So we were looking for funds that would be within that target and really focused on the just energy transition. So in April, we launched a request for concept proposals that outlined very clear criteria about what we were looking for. We wanted to focus in a specific set of geographies. We wanted to focus on a specific set of technologies, really focus on scaling up the delivery of energy in a just way. And in a renewable and clean way. We received over 30 proposals in basically a month, so a very quick turnaround. We shortlisted 10 for full proposals. So the initial was just a concept note, then we asked for 10 full proposals. By late summer, we had selected the 2 awardees that we heard earlier today. So we're really excited about that. And again, the speed and scale was something we were aiming for. I also wanted to say that we were inspired to launch this process after reading a report some of you might have seen. It came out last year during COP from Convergence, which USAID had supported, called a Mobilization Action Plan. They urged donors to look at ways to make blended finance more effective. As Secretary Kerry was saying, it's a buzzword, but we felt like it's been continuously falling short. So how could we do better? So we wanted to test this out by launching a competitive call for proposals that would scan the global marketplace and really help us identify the best ideas out there. Also by coordinating and pooling resources with other donors to enhance efficiency, both on our side, but also hopefully on the fund manager side, so they don't have to be negotiating across multiple different funders. And then also we were looking for structures and ways to incentivize structures that rely less on pure grant funding and more on development finance institutions and private sector arms of MDBs taking strategic risk. So that was something we were looking for in each of the proposals. So we really set out to test these recommendations and to test this model. And as Secretary Kerry said, so far we're very pleased with the results. So, and very excited with where we are today. And without further ado, I'm very excited to now turn to the panelists who will each share their perspective, both about BFET, but also about just blended finance in a broader sense. So I'd like to start with a question for Jacqueline. So we were very fortunate within the SPEC office that, we were having this idea, we started having these discussions, and it also just so happened that USAID had launched a new initiative called the Climate Finance for Development Accelerator almost exactly a year ago. And we were able to rely on that to implement the competitive award process. So Jacqueline, can you share a little bit more about how CFDA does help to accelerate blended finance approaches?
Thanks, Julia, and welcome to everyone. It's really exciting to be here on the stage once again after starting a conversation about a year ago, getting together across the U.S. government, both with SPEC Kerry's office and the DFC, and also going across the ocean to work with the Danish government and really to put our heads together and a lot of time to think about how best to create a blended finance structure. I'm Jacqueline Mositwa, and I lead the climate finance portfolio at USAID. USAID created the Climate Finance for Development Accelerator once again about a year ago to really test innovative climate structures. And so within that, after reading the report that Julia mentioned, we figured how could we do more within the blended finance space? And that was also at the time that the U.S. government was making more commitments under the Just Energy Transition Partnership. And so from our perspective, CFDA, which was set up as a $250 million initiative that aims to mobilize $1.5 billion between now and 2030, we thought, could we use blended finance? Could we use other means? And so after getting together with SPEC Kerry's office, and Julia in particular, we figured, let's test it out. How do we use U.S. government resources to de-risk and also crowd in private capital? Through support from the team at Chemonics, cross-boundary, pollination, as well as convergence, there was a lot that we did from a design stage, really to think through what the end result should be above and beyond mobilization. From a USAID perspective, we were particularly interested in impact. And so how would the fund actually, beyond mobilization, really help to create jobs, skills transfer, decarbonization efforts in high-emitting countries across Asia as well as Africa? I think another part that was really important for us was speed. How can we prove that working with the U.S. government is not as slow and bureaucratic as people might think, but really there are ways of working with us where we can work efficiently with the private sector and really support the private sector in mobilizing funds. I think the other aspect was standardization. How could we work to make sure we created a template of sorts so that this wouldn't be the first and only time, but ultimately that we could do this over and over again? And so so I'm actually really happy that following the success of BFET and the lessons of BFET, today we're actually also going to be launching an adaptation window which follows the same template but really focuses on the goals that we're trying to achieve in adaptation. But for us, BFET was really groundbreaking, in many ways. It's the interagency collaboration, which is not always easy, but we managed to work through that. It's also partnership with international players. We talked to many, many donor partners, and so we're really excited that Denmark came on board with us. Part of it is also how could we really think about the use of grant funding as being catalytic and really working with different partners like Responsibility and Eversource to really think through how to tap into different and additional sources of private capital that we may not as government be able to access. Lastly, on the point of impact, for us as USAID, it was really important to think through the aspect of the just part of the transition. So looking at how we can equitably make sure that people in the countries that we are working in are able to access clean, renewable energy, are able to improve their skill set, are able to transition their economies into green economies. The last thing that I'll say is it's been a great demonstration of our collaboration, but two, it's also allowed us to attract different partners that want to work with us in different ways. So following, the just energy transition and the BFET partnership, now the adaptation window, we're really looking forward to a natural climate solutions window next year as well. So we look forward to partnering with all of you. And I think from a USAID perspective, we get our cues from our USAID missions around the world. So if we do hear demand signals from India, from Zambia, from Peru, that these are the types of finance structures that are needed to solve a lot of the climate financing problems. We are trying to be really responsive to that. And so all that to say is for those operating in the countries that we work in, we definitely welcome your ideas, your partnerships, which aligns really well not only with USAID's climate strategy, but also with our localization agenda. Thank you.
Thank you, Jacqueline. And we were very fortunate to be able to work together on this. So, Jesper, I want to turn to you now. As Jacqueline mentioned, we started talking with you early in the process, and we know that that was also building on a dialogue that you were already having with USAID. From your perspective, how do you see BFET as having helped to foster donor collaboration, and why is it that so valuable? Thanks.
Yeah, that's a good question, Julia. Thank you very much. And just to give a little bit of context, introducing myself, I sit in our development finance team within the Danish Ministry of Foreign Affairs. And let me just start a little bit in the chopper. Back in December last year, we had a new Danish government, right? And in their founding document, maybe 30 pages, there was half a page on Danish development policy. And within that, one of the main points was that we need to use public funding in a risk-willing way to mobilize private capital. And I think when Jacob, sitting here front row, and I saw that, we were thinking, wait a minute, that's what we do. I mean, okay, well, that means that we have a mandate now to actually really test and try out things at a larger scale. And I think so when we saw the BFET transaction coming up, and we were presented with the timeline, which, I mean, to all donors, that's ambitious. It's an ambitious timeline, 8 months, right? We were thinking, well, we're going to challenge our own system if we want to jump on board of this, but we got to do it. If we want to bridge the gap between the way donors operate normally on our grant capital and the capital markets, we have to be innovative also in our internal systems of approving grants, right? So we did that. We jumped aboard with a political pledge in May, matching the American grant with $15 million from our side on it. We had challenges moving that fast internally, definitely, but we managed. Also, of course, because of the political backing, but I think all of our experts could see this huge funding gap and that we needed to be really innovative. So trust was put in us to deliver on this, right? And so, I mean, Danish priorities beyond the financing gap, and I mean, we are delivering $1 billion in a year, or more than that, in climate finance, international climate finance. I think we do punch a little bit above our weight on that. But also in terms of the thematics aligning, as Ambassador Thomas mentioned, to the JET-P countries, that made BFET very attractive to us on that. And I mean, in terms of the impact priorities, of course, the whole energy transition, that made very good sense, but also the just part of it, right? The just energy transition partnerships is the key word. And so we were very happy and thankful and congratulate you on actually also ensuring that there will be a just element to this, right? It will be decent jobs, it will be living wages as part of the investments going on, because we do realize there is a political economy going on in all the countries that you have to ensure a transition of, right? It's an energy transition, but it's also a labor market transition that needs to go hand in hand for this to fly. So that is a great achievement. I think we're a little bit a little corner of the big capital stack, but we still did manage to do an impact from that. So congratulate the winners. We definitely look forward to copying the model from the CFDA more. As Thomas also mentioned, we have the launch in IMCA later today. And the general idea of that is that we want to mobilize billions of dollars using the model from the CFDA. We are pooling more donors together to be able to have more public money to do more scale on that. So please do attend later today as well. Thank you.
Thank you, Jesper, and again, thank you for the partnership from Denmark. We've been very grateful. And now I do want to turn to Rupali and again congratulate you and Satish and all of your colleagues at Eversource for submitting one of the two selected winning proposals. So we're really excited to have you here today because you're the one that can tell us, you know, from your firsthand perspective, why is catalytic funding so important to unlocking institutional capital in these markets to drive investment towards the climate and energy solutions? Thank you.
Thank you, Julia. Let me introduce myself. I'm Rupali Gupta. I work with Eversource Capital and I focus on capital raising. I head investor relations and business development. And I'd also like to take this opportunity to thank you, the BFET program, USAID, US Department, and of course, the Danish government for reposing their trust in us. And we're very happy to be awarded this grant. It'll go a long way. Turning to your question, Julia, I think enough has been said about the funding gap, the trillions of dollars that are required by the developing countries to meet their climate change objectives. There is a huge funding gap. We are all aware of it. We know that there is a lot of climate-related funding that needs to be mobilized. And we are also aware that in order to bridge that funding gap, it is very, very important that we are able to provide an environment, a risk-reward kind of a proposal for the private capital investors to participate, to mobilize capital at scale. Climate investing, and we've been doing it in the region for some time now, tends to be newer asset class, which means that there is limited amount of track record and risk and return profile, etc., available to tap into for the private investors. And hence they view it as risky. And this further gets compounded in the emerging markets because there is a further perception of heightened risk because of geopolitics or currency risk, the lack of green standards, the fear of greenwashing, etc. And that is the reason why it is a little bit more tougher to even get capital into emerging markets in any case, and further to get capital and mobilize private capital into emerging markets in climate change related investments. This is the solution. The blended finance is a solution. When you blend this kind of catalytic capital with commercial capital, you're able to provide that risk-return profile to private investors to then participate. And I think Eversource has been able to sort of create that proof of concept that when you invest these small amount or relatively smaller amounts of catalytic capital, you can actually mobilize many-fold the original amount of capital that was invested. In Fund 1, for example, we utilize about $80 million of concessional capital that we raised from the Green Climate Fund. We went on to raise a fund size of $741 million, which has been invested into 7 portfolio companies. All of these portfolio companies are scaling up rapidly, creating climate impact, just transition, and of course, that means they're also in the process of raising more capital, more debt, more equity. And our estimate is that in the lifetime of the first fund, we would raise about $4.5 billion of capital. So, that is the kind of math you will end up with. Some amount of concessional capital goes on to create, a sort of an avalanche of more capital. A large part of that would be private funding. So there is a proof of concept of being able to do this and mobilize and multiply the capital and be able to provide the risk-return environment for private capital to come into climate change investment opportunities into the emerging markets.
Thank you so much. And I should also note, going back to Jake's comment earlier, we were really excited to be able to combine the BFET pure catalytic grant capital with GFC's equity to really help you, launch and kick off your efforts on the Fund 2. So congratulations again. I'm watching the clock here, so I'm going to turn now to Director General Meyer from BMZ. Director General, Germany was the first and so far the largest catalytic funder in Responsibility's Asia Climate Fund, which is, we unfortunately don't have one of their representatives here today, but I think you'll be able to speak to them. They reached first close a week ago with your support and also with the support of the Dutch Development Bank, FMO. We're really glad to have you here on the panel today. I also wanted to thank Ms. Carrie Balsack from FMO, who I believe is right here in the audience. So thank you so much for joining us. So coming back to you, Director General, Germany provided a significant contribution to the junior tranche of Responsibility's Asia Climate Fund. And that goes back to something that Secretary Kerry was saying earlier. Like, we were really looking for examples where GFIs were coming in that risk-taking layer. So what is Germany's rationale for taking those types of catalytic positions in blended finance vehicles like Responsibility, but also in others?
Yeah, thank you very much for that. What is our rationale? I think when we listen to what was said already on the panel, what we are trying to do collectively is to organize energy transition, as a business model. That's the key of everything. And therefore the rationale of looking how we spend money is different to when we spend public money only. So it's the combination of both, because we need the public, because we need the private sector, and we need the combination. Why do we need the combination? What we are doing is preparing the markets for this kind of business model. And doing that, we have different puzzle stones we just put together now. There is, of course, the puzzle stone of, especially when we look in emerging markets, of national ownership and national ambition. We have that on the panel and among the countries. When we talk about it, we need rules for that. So we need taxonomies. We see that we have an emerging amount of governments say we need taxonomies because then private investors have rules what is actually paying for the transition and what is not, what is greenwashing and so on. And then we have to manage the financial flows. And we know that anybody who wants to invest has to be some kind of security, that there is a rationale on the market. And when we talk about blended finance, we try to organize in a way showcases that help all the investors to find trust in these emerging markets. And that's, I think, the rationale behind blended finance, behind this initiative, and behind the contribution and the engagement of German government and other partners elsewhere. And beyond that, we have big changes when it comes, for instance, to the evolution process among the MDBs, who also put the question, how do we organize these markets? How do we attract private investors to go into the markets, put that on top one of their agenda? And we are quite curious to see, for instance, what is coming out of the private sector lab from the World Bank when it comes to the spring meeting. We see that many initiatives are on the way. We have to scale them up, and we have to have very good showcases like this one here to show, yes, these markets are going to be organized, and you can make money in future on that, and then you can spend it.
Thank you very much. And I'm so glad you mentioned the MDB reform agenda. That is also something we were hoping to do with this process, is to provide inspiration and essentially offer a model that would show MDBs and others that how much more can be done if there's more strategic risk taking. So thank you for bringing that up. I do see that we are officially out of time. We have all zeros in front of us, but I think we dove right in, and I forgot to also go back and thank our high-level speakers earlier, Secretary Kerry, Ambassador Christensen, and State Secretary Flasbarth, who, without their leadership on climate and blended finance, none of us would be here today. So I did want to come back and thank them, a couple in absentia. And I also just want to thank my panelists again. And my regret is that we don't have time to kind of go back and forth. But I can stay longer. I welcome others. If you have time, we can kind of hover outside for any follow-up questions you might have with us. And we really, lastly, two lastlies, but once again want to congratulate the award winners for BFET, Eversource, and Responsibility. And to you all, I hope you're leaving this event inspired and with new ideas for how we can, take blended finance from being more of a buzzword to something that we can scale more effectively going forward. And again, we very much welcome collaboration, so hope to hear from many of you. Thank you. Thank you.